Welcome back to Mentor Nation, the podcast for entrepreneurs looking for real mentorship, real strategies, and real stories so that you can go out and build your dreams. I'm your host, John Abbas, and it's time for another episode, so buckle your seatbelt and let's go. Hey everyone, welcome back to the Mentor Nation podcast, where, as always, my goal is to have guests on here to share wisdom and mentorship and just give you something practical that will help you in your day or your week or your life. It's just crazy. As I speak today, there are just a lot of things going on in the planet. And if you're listening to this live on June 8th, 2020, one of the big things that's happening right now is the economy is starting to open back up from the coronavirus. And I don't know about you, but to me, 2020 has just been a year literally out of the twilight zone. And I know that we're all excited to get back to normal, whatever normal may look like for you. I just can't wait for that. I was at Whole Foods earlier, standing on these little dots outside, 6 feet apart. I mean, it's just absolutely crazy. I can't wait for everything to get back to normal. Now, one of the things that I'm really excited about is the conversation with today's guest. Greg OBrien is just a brilliant CPA and a tax coach, and he's located in the beautiful city of Boston. Him and his amazing team help hundreds of entrepreneurs all over the country maximize their profits and minimize any money unnecessarily paid to Uncle Sam. Obviously, that's important if you are an entrepreneur. Today's episode is all about how entrepreneurs can legally hack the tax code and never pay more taxes than you should. And I know what some of you might be thinking before this podcast episode comes on, oh man, tax advice, that sounds like super boring. Hell no, not this episode. Greg is an incredible guy. He's full of energy. He's extremely smart. And most importantly, he shares things that all of you entrepreneurs, you need to hear. I didn't realize this myself, but a huge majority, meaning over 80% of entrepreneurs pay more taxes than they have to if they just knew better. Greg shares some incredible hacks, some killer statistics, and some strategies and questions to ask your CPA to make sure that you have the right person on your team. Now, real quick, before we bring Greg on, I want you guys all to do me a favor and go over to mentornationpodcast.com and subscribe to our newsletter. I'm telling you, I'm going to give you so many goodies if you do this. You will get a ton of free stuff, including a super valuable blueprint I created that will show you exactly how to get millionaires to mentor you personally. But I want you to subscribe because I really have some incredible and meaningful episodes coming up. And that's the best way to get notified when they go live. So make sure you subscribe over at mentornationpodcast.com. Without further ado, please help me welcome Greg to the show. All right, Greg, thank you so much for being on the Mentor Nation podcast, man. I am excited about this interview and I'm excited to have you.
Hey, John, nice to be with you today. Hope everything's going well down in Nashville.
Yeah, absolutely. Just self-quarantining in these crazy times. Yeah. That's you. How is it actually? Before we start, how's it going up there in Boston?
It's day at a time here. We're still shut down, I guess, officially until the 18th. So
awesome.
They finally announced that golf courses are going to open this weekend. So at least there's something to do. I think we're the last state to allow that. But yeah, so they're opening those back up.
That's awesome. Greg, so just so the audience understands a little bit about what you do, and I'm going to explain exactly why this is, in my opinion, such an important interview that everybody really needs to pay attention to. But could you just share a little bit about your expertise and what you do for business owners?
Yeah, so I'm a CPA. I'm in Boston. My practice is completely virtual, so employees in different states around the country. So we're working with entrepreneurs, small business owners in various industries. And the primary thing that we try to do differently is coach business owners on their tax planning. So where a lot of CPAs will only focus on kind of the compliance aspect of things, which is great, and just maybe keeping the numbers straight. We try to look at it as a proactive solution, right? So how do we actively reduce your taxable income each year? What strategies are going to help you now and also years from now? So, one thing that I did several years ago that, was a benefit to me was getting certified as a certified tax coach through the American Institute of Certified Tax Planners. So a little bit of a different background than a lot of CPAs. So we're
Yeah.
focused on advanced strategies, mostly focused on business owners. And that can include somebody that just has kind of a side hustle, right? Because that is a business in the IRS's eyes. So we're looking at business owners, investors, real estate owners. Those are our primary clients right now.
That's awesome. I want to give the audience a little bit of context because, I mean, I don't know how you feel about it, but I feel like a lot of people, when they hear taxes, they're like, ugh, and they think IRS and they think textbooks,
Boring.
Yeah, I don't want to listen to that. But man, here's the thing. Like as a business owner, I didn't even start paying attention to this until I was like 35. And I just wish I had done it sooner. I mean, I really do. I wish in my 20s when I was aggressively building and making money and spending it, trying to look cool and shit and just being an idiot. Like I had a mentor of mine a few years ago. He told me this and he's like, making money is literally only 50% of the equation. The other 50% is keeping it, preservation of wealth, and it's so crucial. So can you speak to that just big picture wise, why that's important? Because you look at the stats of when people are retiring and they don't have enough money, and it's because they're not thinking about this when they're in their 20s and they're in their 30s. So can you just speak a little bit to that preservation of capital?
Absolutely. So I think the first thing, people get overwhelmed with tax when they think about it. The U.S. tax code right now is over 77,000 pages long. Probably if it was on paper, it'd be the biggest book you've ever seen. So I'm not going to tell you that I'm an expert in all 77,000 pages because I'm not. And if someone tells you they are, they're probably lying to you. So
Yeah.
It is a wide-ranging code. However, a lot of people, traditionally look at it as a book of laws, which it is. But I think you should be looking at it as really a guide to wealth. It is your kind of your roadmap to financial freedom, in my opinion. And the reason I say that is, the government really set up the tax code to help people like you, like business owners, right? So they want people to invest. They want people to start businesses, take risks, hire people, because ultimately they're all going to contribute to society. That helps the economy. So the tax code is written to help business owners, and real estate investors, honestly, is the other big group that it favors. And I will say it does, leave behind employees. They don't have as many incentives for employees. There are some, but I think everyone should be looking at the tax code as a blueprint to wealth, as, a book of incentives, right? Not, there are rules in it, but they're incentives for business owners to take advantage of. And there are so many things that business owners just miss, right? And there's a reason they're in the tax code, and that's because Congress, wants people to start businesses, take risks, expand their businesses. And if you look at, some of the largest businesses in the country, some people will complain that their tax rates are low. That's not because they're doing anything wrong. That is because they have good advisors and they are taking advantage of the rules as they are written. And then there is a reason they are written the way they are, because those businesses are employing the most people, they're creating the most jobs, they are paying tax. It's just at a lower rate because of the risks they're taking.
Yeah, I don't know if you remember, it was like all year long on Yahoo, the article was like, Amazon made this many billions of dollars and paid zero. And it was like on every headline. Do you remember that?
Right. Oh, yeah. There's a lot of articles like that. There'll be articles about Warren Buffett and, does he pay any tax and all this stuff. A lot of the billionaires you hear about that, quote unquote, don't pay tax, it is because they have a substantial amount of holdings in real estate. And real estate is a beautiful thing in the tax code because real estate appreciates. It gets, it should increase in value unless there's some kind of major market issue. And for tax purposes, you are depreciating it, meaning that you're writing off the cost of that property over time. And you can do that in several different methods. And you have all sorts of expenses you can allocate. So, real estate is something that you can cash flow, put money in your pocket from, but you might not pay taxes on it. You might actually show a loss that offsets other income. That's
awesome. And I really like the way that you put that, like not looking at the tax law as something to get you, but look at it as an incentive book, and there's just rules and you just look at it like, if I learn how to play the game, then I can succeed, because the reason they put those in there it's more incentives, not restrictions. I really, really like the way that you said that. So to shift gears for just a second, the W-2 employee, if they're listening to this right now and they're like, oh crap, like I don't have a business, I'm not an entrepreneur. Like, do you recommend that they because it seems like there's nothing really incentivized for them. Do you recommend they go start some kind of a side hustle right away?
Yeah. So I think that so employees, certainly there's a few things you can do to make things more efficient. I'll say, the group in general that has been left behind in the tax code is the high earning W-2. So sometimes you might think of say a doctor that works for a hospital, that's
Yep.
making substantial amount of money, but it's all wages. It's hard to change those facts for them. So that can be tough. There's some things, but it's not as powerful. So you asked about a side business. I think that everyone should, if they have that desire, start a side business, right? It's not as hard as you think. You don't even have to start an LLC if you don't want to. You can just start as a sole proprietor. You can test it out. And, you don't have to be worried about, if you don't make any income in the first year, the IRS isn't going to come after you for having losses in the first year or two. As long as you're trying to earn a profit, I think it's great. And that will allow you now to take advantage of some of these business incentives that are out there. And a lot of them are targeted towards small businesses. Right. They're not all made for the Fortune 500 companies. In fact, most of them are actually made for small businesses, and there's caps on different things. So I do encourage people, if you have that idea, take a shot. It doesn't have to be anything too formal. You don't need this complex business setup. It can be, you can start selling something on Amazon, right? It can be simple. I think I've seen over the years, people start that little side business and it's grown to something pretty special quicker than they thought.
Yeah, absolutely. I mean, I've had several over the years. Just one example, I lost my restaurant in 2009 with the economy. So that was like the worst time ever. Mm-hmm. And so I moved back to Nashville, and the only job I could get, because I've been an entrepreneur, and then in the Navy, I was a nuclear engineer, and I hated engineering. And so
wow,
I get this job teaching ballroom dancing, and it was the worst job ever. I got off Craigslist, and I was like, "The hell with this!" So I got on Google, and I'm like, cheapest businesses to start for like no money, and one of them was window cleaning. And I no joke, I bought this window cleaning kit online, and I went into a neighborhood, and within like literally 2 weeks, I was making about $1,000 a week, charging $250 a house. I could do one house in like 6 hours. It's not as hard as people think. So just to get back on topic, could you, like, if you had to guess, out of all the business owners that you work with, like that you come in contact with all of the time, like what would be your best guess percentage wise? How many people could be making or saving more money if they had your kind of expertise? Like how many people are doing it wrong is what I'm saying. Like, is it like 20%, 80%?
It's 80% or more. I wouldn't say wrong. They're just not doing everything they could. And it's interesting. We have, a lot of people will come to us and say, I think we're missing something that, the person I've been using doesn't know, or they haven't told us, / we haven't been, using anyone with our business. I think we might be missing something. And usually if people have that thought, they are. And tax planning is interesting because there are, very simple, easy, quick things that, that you can implement and fix. And there is some honestly very complex and gnarly stuff that for the right businesses makes sense, right? That might involve bringing in, lawyers and engineers and different service professionals to help. But, when people start saying, geez, that's going to save me 6 figures or 20%, they're willing to make those investments. So, tax planning is wide range. It can be, simple stuff, ideas, and it can be very complex stuff as well, especially if you start to get into, long-term stuff like estate planning. And a lot of those kind of high-end strategies, mm-hmm. I don't recommend those for small business owners that are just getting started. Those are more when you're well established and you have a robust, small business that, you're looking at now preserving that wealth for generations to come. So there's levels to it.
I love that. Can you share a story, just like a really cool story of a business that you work with that you were able to save or help make a lot more money? Do you have any cool stories like that up your sleeve?
Yeah. One we worked on recently, a business owner in Florida came to us, had a prior accountant that worked for him, but just wasn't really specialized in this type of stuff. And in his industry, I kind of said right away, geez, there's going to be stuff here that I know that they're missing. So the cool thing about the tax code is that if you do make mistakes, you do have time to go back and fix them. So in this case, we found certain tax credits that they weren't taking that they were entitled to. So we went back and we amended the prior 3 years, and actually the government sent checks back, refunds back because those credits are missed. So he got double-digit refunds for those 3 years, and then that same credit we're going to be claiming and backing up is going to be good every year going forward. So he went from somewhere in the low 30% tax rate now down to low 20s. So when you multiply that over years, as the income growing, that number grows. It's amazing. So that's the cool thing too, is sometimes not all is lost. You can go back and fix stuff, if you were entitled to it and you missed it. And the IRS several years ago, they put out some study, or a taxpayer group put out a study in the billions and billions of dollars that they actually know that are overpaid in taxes is astounding. I mean, the IRS is not going to come to you and say, "Oh, hey, John, just to let you know, you overpaid by, 10,000. Now, if you physically pay them too much, they'll give it back to you. But if you just don't take a deduction or don't take a credit, they're not going to come tell you that. So that's up to you to do. But you do have the right to fix it. So yeah, it was a cool story. And, then that money that he got back, he was able to go invest that into his business, and we talked about hiring employees or buying new equipment. It's pretty cool that now he had a tangible result there.
Man, that's awesome. Now, you said you got certified to be a tax coach. Can you, is there a major difference between a CPA and a CPA / certified tax coach? What's the difference there?
Yeah. So a CPA is definitely, very high standing. That took, all of my years of studying and whatnot to do that. And then I went and got a master's in taxation as well, which was brutal, honestly. So, then when you become a CPA, you take this exam and it's on a multitude of things. So the easiest way for me to explain it is that, think of a doctor. There are, heart surgeons and there are podiatrists, and they both both do great work and they do different things. So probably wouldn't want your podiatrist working on your heart or vice versa. So just because they're a doctor, right? So CPAs is the same way, that there's many different niches within it. There are some CPAs that do auditing, so they do financial statement audits of larger businesses. There are CPAs that work on valuation, so they'll do valuation work. And then there are CPAs that purely focus on tax compliance, meaning that, they may have a large amount of clients that they're, really just filing their taxes. They get the numbers from a bookkeeper or an accountant, and then they file the taxes. Now, what the certified tax coach does, it's a little bit different, is we're not going to wait until December 30th to start your quote unquote tax planning, which a lot of people tend to do. We're looking now to do that, because a lot of this stuff has to be implemented throughout the year to get the biggest bang for your buck. So we're looking at proactive things. And of course, we usually take care of the compliance as well. That's important. But we look at the compliance as really just a report card and how well you planned. So if we can, proactive planning now, I say proactive, I like to start at the end. So we'll say, John, what's the goal for your business? Where do you want to be in 5, 7, 10 years? Or are you scaling and selling? Are you running this for the next 30 years? So we start with that, because we need to know that first to craft the strategies around that. And then we, come up with yearly plans each year of how we're going to do it. So it's just a more proactive approach to things, and really, niching down into certain areas of the tax code that I know are going to save people money.
That's awesome. So are there some common ways that people can use the tax code to their advantage, like some things that you recommend? So let's just say, I don't know, maybe solopreneurs. Let's just start there. Are there some basic things that you see a lot of people aren't doing that they could be doing, like simple things that they could implement that would help them?
Yeah, an easy one, and it's the fun one that we actually talked about right before the show is, if you have children, the government now will allow you essentially to fund, if you think about it this way, that you can fund their education or fund their camps, whatever you want to do. Because when you're usually, you're making money, you're paying tax on it, then you're going and paying your children's whatever, their living expenses. Now, what if you could turn that around and have all that money you pay for your kids pre-tax? So, if you have 2 children and you have a little small business, you can legally hire them onto your business, pay them up to $12,400 each per year, tax-free. So the way that really works is that the kids, so long as they don't, have any other type of income, can be paid up to the standard deduction, which is $12,400 for doing legitimate work in your business. Now, they don't have to be computer whizzes or brainiacs yet. They can be doing paperwork. They can be doing, cleaning of your home office, different things. And we work to document that stuff as such, so it's all legitimate. But, you can pay them that money tax-free. So now you have 2 kids. You, as the business owner, just received a $24,000 tax deduction at a pretty high tax rate. And the kids just got that money into their bank accounts that they can now go and spend on their own education or spend on whatever. And that's tax-free to them. So when you think about it, you just, shifted income from a high bracket to a low bracket completely legitimately. So we often see business owners that aren't taking advantage of stuff like that, and their kids are sitting around. It's like, hey, let's put them to work. So yeah, that's a fun one.
Like that right there is literally worth this entire interview times 10. I mean, I have 3 kids, right? And I just found out about this, which is why I'm really glad that you said it. I mean, it's just That's so crazy to think about, right? Like throw their video games out, have them go rake some leaves or something. No, I'm kidding. So I know a question that I get asked a lot that I wanted to ask you for just a much better answer. People always ask, they want to start selling things online. That's like usually one of the first things that they want to do. And they always ask me like, well, should I start an LLC? Should I incorporate? When should I incorporate? Like, when should people think about that? Or is it really just not even worth it in the beginning? Is it more if they're starting a business where they could get sued? Like can you just speak on that for just a minute?
Yeah. So anytime you're talking about entities and entity planning, I think the first thing is liability, right? There are tax benefits that come with different entities, but never kind of let the tax tail wag the dog, right? So you want to make sure you're protected first, and then you can worry about the cool tax parts second. So, I was just actually talking to a group of multi-level marketers yesterday about the same thing. And when is the right time? And there is no kind of bright line test for that. And what I usually say is, when this becomes more than a hobby, when this becomes something that you're trying to grow and trying to scale, then that's probably time to talk about, starting a simple LLC. And the reason being is that, again, if you're building an asset, you want to make sure it's protected. The last thing you want is that something goes wrong. You hate to talk about that kind of stuff, but there's death, divorce, incapacitation, that kind of stuff. You don't want your personal life exposed for any type of negative liabilities that may happen. So it's pretty quick and easy to get that kind of stuff set up and segregate that business out of your personal life, off of your social security number onto a business EIN, which is the equivalent. So, on day one, is it always necessary if someone's going to say, hey, I'm going to start trying to sell something on Amazon? Maybe not, unless the e-commerce seller requires it. I usually say, okay, let's do a little proof of concept testing here, and then, okay, now this seems like it's working. Let's talk about forming a business. Now, I think also the mistake people make around forming the business is that there's way too many do-it-yourself type things, or to try to wing it. And then you wing it and nothing bad happens. And then years go on and you still have this kind of faulty structure behind you. And that's where I've seen problems. I mean, I dealt with a case last year with a brothers that formed a little business and happened to be successful, and years went by and they kind of forgot that they were winging at the beginning. And then they decided they weren't friends anymore 20 years later. And they actually, they didn't have an operating agreement behind this entity. And so, it ended up in mediation, and all this stuff could have been avoided if they had just done the right thing at the beginning. So I hate to see that. So I do, when people are ready to form that business, get a professional to help. It's a little bit of an investment that's going to be, worth it in the long run. And then once now this is up and running, now you can start talking with CPAs and planners about, okay, when's the right time to, to make, these tax planning moves, now that I'm kind of more established.
Absolutely. Now, I know, hopefully everybody will now go to you as a tax coach, but for the thousands of people out there that will listen to this, I feel like a CPA is a lot like a car mechanic or a doctor, right? Like most people just trust that they're going to do the right thing because the scope of it is so over their head. Like, is there any advice that you could give, or 2-3 questions they should ask their CPA so that they know they pick someone that really has their best interest, not necessarily has their best interest in mind, but really understands what is best for their business?
Sure. So I think there's a few things that I would ask. One, I would ask how many clients do they have? And the answer to that question, in my opinion, the best answer is not going to be the highest number, right? Because what I have found over the years is that the firms or the CPAs or the accountants that get bogged down with thousands of clients, they lose track of you. And I don't understand how a CPA would really know all of those people, right? I mean, it seems very difficult, but there are firms like that. And, they're more worried about compliance and milling through the work and getting it done. So, and that's some people, that's all they want. That's fine. But if you're looking for a relationship, that may be kind of a red flag right away. Two, and I'd kind of ask them, what is their avatar? Who do they typically work with? And see if it's like you. If they say, gee, we work with, mostly retirees on their long-term and elderly care planning, that may not be right for you. You may be looking for someone that's a small business owner. And in fact, you may say, I want to niche down further. Let's say you're a dentist. You just want to find that CPA that works with dentists or has a lot of dental clients. You may not want to be the guinea pig for them to test out a new industry. So you may want to ask that. Then I would ask them about communication. What's their communication structure? Is it unstructured or is it structured? Are they only talking to you in April, or do they talk to their clients throughout the year? And again, if you want to be involved in planning, I would want to look out for, someone that has proactive scheduled meetings with their clients, their small business clients, rather than waiting for you to come to them, because that's probably not going to work out well for you if you're looking to do planning. If you're, calling them up saying, hey, I just read this article about, this new tax law, you should make sure that that kind of stuff's proactively scheduled.
God, man, such great advice. I can't tell you how important, like I'm over here taking little side notes. So can you just speak a little bit, like, do tax codes vary a lot state to state? And when you're trying to find a CPA, do you recommend trying to find someone in your state? Or because mine personally, I don't know, are you familiar with Russell Brunson? Created ClickFunnels. So his dad is actually my CPA, and he
Amazing.
lives.
I didn't know that.
Yeah. So he's been my CPA for a couple of years now, and he helped us a lot with a lot of what you're talking about. Like, he's the one that got us actually in the right direction when I was 35. But, he's in Idaho and I'm in Tennessee. And so he does great, but what's your take? Like, how much does the tax code vary state to state? And what's your recommendation on finding someone in state, out of state? Does it matter?
So in general, the way that the state tax codes work is the majority of the states reflect the Internal Revenue Code. And where there becomes issues is that, when we went through something like tax reform at the end of 2017, that was the biggest tax change we've seen since 1986. So when we went through that, there was some controversial things in there. So the states can either adopt that or not adopt that. So again, most states adopted it. There were a few states that said, we're not adopting certain parts of this law, which makes things difficult, but it's not the end of the world. So, we're set up virtually at my firm. I think we have clients in 15 states and four countries in Europe right now. So your license as a CPA has reciprocity, so you can practice in all the states. Where I'd say that you may want a little state-specific help, especially if you're on the business side. Different states have different business credits available at the state level. They're usually industry-specific as well. A lot of them tend to are towards R&D or manufacturing type of. Or in Massachusetts here, we have film credits, which is interesting. It's just a random thing. They want people to come film commercials and TV shows here. But so there's nifty things like that now a CPA in Idaho may not know that there's a film credit in Massachusetts, right? So I wouldn't make that your first thing, because I think there's a lot of tax planners that do a great job, and 95% of the work is done at the federal level and the states reflected. There's just a few gnarly things in there. And again, if we have to go into a new state, we have to spend time ahead of time understanding any differences that exist. But yeah, in general, they reflect the same laws.
Gotcha. That makes perfect sense. I can't remember. I read it a long time ago. It was like 50 unbelievably crazy things in each state. Like, there's like some random law in every state.
Especially when you get to, talking about tax, a little outside of this, but when you talk about sales tax, that's where it gets sales tax, like a whole other thing. It gets a little funky there. Like New York State has some crazy things. And if you look at where soda is, some states tax sales tax on soda, some don't, some tax on candy, but candy versus a protein bar are two different things. So the protein bar is not taxed, the candy is taxed. Like, that stuff gets pretty crazy when you want to talk about local taxation. So there are just entire industries now that are dealing with sales tax compliance. And it becomes important too for people that are selling through Amazon or eBay, when their volume picks up. I have seen issues pop up pretty quickly where, I just sold 20,000 of my protein bar to Idaho. Do I have to file sales tax in Idaho, right? And that's a state-specific issue. So that stuff can become complicated over time. But luckily now there's a lot of good software solutions out there that are helping small business owners on the sales tax side.
That's awesome. That's really good to know. You said something earlier in the podcast that I wanted to because I just have two more questions. One of them is on the real estate side, because you mentioned that the tax code was written for business owners and a majority of it is written for real estate investors. And I feel like, obviously, with what's going on right now, I think it's going to be a little bit of time. My fiance, she's a realtor and they're a high producing team here in Nashville. And, the consensus is, in the next year to 18 months, there's going to be a lot of opportunities in real estate. And so I think that might be a great opportunity for people to venture off into, real estate investing. Can you just spend like a minute or two just talking about some of the benefits, or how someone could benefit if they got into real estate investing, and like maybe some of the cool advantages?
Yeah. So real estate investing is amazing. Like I said before, because you're buying an asset that appreciates, right? It's not like a car. Like a car does depreciate, so the asset should be appreciating. But for tax purposes, you get to depreciate it or write it off, right? So you have this paper paper expense, right? So people always go, what is depreciation thing? So, you're really writing off the value of the building over time. So it's not money coming out of your pocket, but it's an expense that reduces your income.
Yep.
So now when you look at that, it's like, okay, how do we maximize that benefit? So, we'll do a lot of times with someone that's just new into real estate. Let's say they buy their first building.
Yep.
A lot of CPAs will say, okay, the building is $500,000. We need to depreciate that over 39 years. Now, there's a cool provision in the tax code that allows you to break that building down into component parts. So with the help of an engineer and a CPA, what you can do is say, okay, that $500,000 is actually made up of a bunch of little parts that are each $5,000, $10,000, $15,000. And the IRS will allow you to write those off through depreciation a lot quicker than the 39 years the whole building has to be written off. So, you could potentially write off 1/3 of that whole purchase price in year one if you structure it correctly, even if you didn't lay out a $500,000 in cash. So think about it. You may have bank financing, so you get a $500,000 building. You use this accelerated depreciation method, and you're writing off, let's say, 200,000 of that right away. That loss you just created can offset some of your other income you have from your business or from W-2 in some cases. So when you look at an ROI, you could be recouping that down payment in year one. So it's a pretty amazing, the sophisticated real estate investors have done this forever. A lot of syndicators do this, and it's amazing of how much you can actually save. And the IRS tax code allows you to do it. It's a timing thing, right? You're deferring and you're shifting when you're speeding things up versus taking it pro rata over those 39 years by doing it this way. So that's always amazing, and people can see a quicker ROI on their money. Now you have that, you might get a refund from that. Now you have that extra money. You can go buy building two, right? Do the same thing. One of the cool things about real estate too is at the end, if you sell this asset, okay, geez, now I got to pay tax on it. But the tax code, there's two ways in the tax code now that you can defer or reduce that tax at the end. So you can, it's capital gains income. It's taxed at a lower rate anyways, but you're allowed to reinvest those proceeds at the end and now defer that tax. And, you can really get nifty, and you can defer that tax forever, honestly, through your estate. So real estate is so many powerful strategies you can use. So, a lot of times people will look at, how do I get into real estate? Where do I start? What do I do? And, I think and people get too excited sometimes. They try to do this all at once. But if you're starting with a nice single family or something like that, talk to a CPA, talk to somebody, say, hey, just want to make sure I set this up correctly. I am taking advantage of the deductions I can, because there are other things too, right? You may not realize that you going to check on your rental property, driving there, you can write off that mileage. So things like if you're out of state, you're flying to go see the rental property, maybe you'll write that off. Now, there's all sorts of cool things you can do too. If you say, all right, my rental property's in Florida, and I'm gonna pigeonhole that, on the back end of a vacation. That's how you can legally make your vacation tax deductible. There's all sorts of these little strategies that when you start getting into it, it's amazing. And so now you may have, on paper, you think you have $15,000 of rental income, but you have all these deductions on top of it. Maybe you have a $5,000 loss actually. And that loss may be able to offset other income. So,
that's
real estate's a
incredible.
powerful thing. People always, that's why they say, some of these moguls out there in real estate, how come they haven't paid taxes? And that's why the government's allowing you to do these certain things.
It's just like, the more I think about it, it's just like, the people that complain about it, it's like, man, it's just a game, right? You either learn how to play it or don't complain about it, because other people know how to play it. I mean, the rule books are there for everybody, right? Like you choose whether you want to learn how to take advantage of it, or you just bitch and complain about why it's not working for you and you're not taking the time. So, man, that's so valuable. Now, my last question, one of the interviews that I listened to with you, you said some things that were really powerful. And I don't know which one of these is the most important or which one you want to speak to. They're all really cool. Is deduction planning, tax credit planning, income shifting, tax deferral, and 199A deduction. Is there any one or two of those that you want to just touch on really quickly that might apply to the masses?
Sure. So I think the first thing is deferral planning. And this, I think I look at this a little bit differently than other people. So deferral, the easiest way to think of deferral is a 401k. So you have wages of $200,000 at your job, but you defer $19,000 into your 401k. You're only taxed on the difference there. So you're not getting taxed on that full 200. The 19 is protected, goes into this 401k account, and then it's going to grow tax deferred, not tax free. And then at the end, you 30 years from now, when that money comes out, you'll be paying taxes on it. And that makes sense at first because, you're saving on taxes now. But I like to ask people, what is your overall philosophy? What's your investment philosophy? And what is your outlook on life? Because, some people will say, if you look at where we are now as a country in our debt and where our tax rates are now, tax rates have to go up. There's only one way they have to go. And after what's just happened with the CARES Act and all these small business loan programs, they're going up. And I don't know when, but they're going up. So right now, the tax are the lowest they've really ever been. And would it make more sense to pay some tax now and have that tax free in the future? So if you're someone that believes tax rates are going to go up and I'm going to make far more money into the future than I make now, it probably doesn't make sense to be putting all of your money into pre-tax accounts. And some people, they have to think about that a couple times. But would you rather, if you're in the 20% tax bracket now, pay the 20%, get it over with, think of it as a Roth, put that money in a post-tax account, have it grow tax-free versus get that nice cool deduction now, defer that, kick the can 30 years from now. But you're risking that the tax rates could be 50% and you may be in a higher tax bracket then. So just doing the time value of money there, it's a tough decision for people. So I think we have been set up as a society just to default to deferring taxes because that's what they told you. You got to put your money in your 401k. But does it make more sense maybe to take that 401k money and invest in real estate and have a tax efficient cash flowing asset? So there's a lot of people I have a lot of clients that believe like that. And there's some of my more successful clients that they're not going to go into business with the government on a 401k. They're going to make their own way through real estate and have these tax protections. So I think people need to think of that and come up with their philosophy because there's no right answer. But just, I don't like telling people what to do. I say, hey, here are your two options. What do you want to do? So that's deferral of taxes. 199A is a really powerful thing. And what I've said before is if you ask your accountant or your advisor what 199A is and they don't know, then it's probably time to, because it's a very powerful provision that they stuck into the tax code in 2017-18 in the reform. And its most basic form, they're saying, hey, business owners, for being a small business, a qualified small business, you're getting a 20% deduction off of your income. No questions asked. It seems simple, but there are so many ways to plan. How do you make that 20% more valuable for you? And as your income grows, they start phasing that out. So now you have to plan, how do I get my income down to take that 20% deduction? And depending on what industry in, they kind of discriminate against service professionals, consultants, lawyers, dentists, doctors. So there's a little more tricky around them. But the planning around 199A is amazing because, you can, at its most basic form, if you have $100,000 of income, you're going to get a $20,000 deduction off of that if you plan for it properly. So again, it goes back to what I said, the government wants small businesses to succeed. They're doing this to lower your tax rate, have more money, have more capital to reinvest. So absolutely something everyone should be taking advantage of.
Man, I tell you, Greg, I've done a lot of interviews, and in 40 minutes, this has probably been one of the most informational, helpful, and impactful. So I appreciate just everything that you've shared with everybody today. The biggest thing now is just how can people connect with you, follow your work, your content, use your services? Like, what's the best way to get in touch with you or your company?
Absolutely. People can go to gotaxplanning.com and you can get in touch with us there. You can find me on LinkedIn as well, but gotaxplanning.com is probably the best way. And then in just a month or two, myself and a few other certified tax coaches have a book coming out called Thinking Outside the Tax Box, which expands on a lot of this stuff. So if you want, more kind of free content, that's probably, be a good book to read. And that'll be coming out in about a month.
I love the title. Who created it? Did you think of that?
No, it was a collaboration effort. Yeah. So it's a nifty title.
Yeah. I really like that title. Well, Greg, man, it has been an absolute pleasure. I just want to thank you for your time and you jumping on here and sharing so many valuable nuggets with the audience. And I hope after your book comes out, man, we can have you on the podcast another time.
I would love to do that. Thanks, John. It's been a lot of fun.
Yeah, absolutely. All right, everybody. I want to share something really funny with you guys. It's funny, but believe it or not, as I write the introduction to each episode and the outro, meaning what I'm saying right now, of every single episode, one of the main parts that I always get stuck on is what to say, like right when the episode is over. Like I literally will stare at my computer sometimes for 10 minutes and I'll write things like boom, or there you have it, or all right, everyone. And then I'll just delete it and I'll keep wasting like an hour trying to figure out what makes sense. I just had to let you guys know that, that's just my way of letting you know that I don't have it all figured out, but I try. And I do want to thank you for listening to this podcast. It means a lot that you give me some of your time, whether it's on a drive or while you're at work or while you're at home. Now, if you enjoyed today's episode, or if you think Greg shared some really valuable information, guys, look, just make sure you go over, visit his website. It's GregOBrienCPA.com. I'll put it in the show notes. And while you're at it, if you would be so willing to stop over and just leave the podcast a review and 5 stars, I would greatly appreciate it. That's all for today, and you better believe I'll be back with another awesome episode next week. Take care and stay safe, everybody. Have a great week.